Hi, I'm Ryan Lightfoot-Brown, Research Analyst at FundCalibre. We're joined today by Thomas Moore, Manager of the elite-rated Standard Life Investments UK Equity Income Unconstrained Fund. Hi, Tom.
Hi, Ryan.
Tom, you have a great track record of growing the fund's dividend throughout the period that you've run it. With the marketplaces at the moment and some of the questions over the abilities of these funds to pay out their dividends, do you still see this as possible for your fund going forwards?
Yeah, I'm really confident about the dividend growth potential of the fund, and that's because the companies we invest in have the potential to grow their dividends. Now, we use a process that we call Unconstrained, which means that we can avoid areas of vulnerability, and we believe that some of those most vulnerable areas are among the mega cap stocks in the top end of the FTSE 100, and we can actually spend all our time looking for companies with the best dividend growth prospects, which can be from the FTSE 100, from the FTSE 250, right down in the small cap, wherever we can see the best opportunities for a combination of dividend yield and dividend growth. And that's not necessarily the traditional hunting ground of the UK equity income sector. So we think by being selective, we can avoid areas of vulnerability, like we did in 2014 and 2015, where we avoided some of the banks that cut their dividends, some of the mining companies that cut their dividends. We can spend our time really on the positive side, looking for companies with good dividend growth prospects.
Your fund had a bit of a tough time after the vote on the EU referendum. Have you changed anything as a consequence of that?
We haven't had to change very much because the companies that we're investing in are coming out with stellar numbers. That's continuing. The economic impact of the EU referendum hasn't been nearly as great as the economists had been expecting, and the earnings coming through are allowing these companies to deliver very strong dividend growth. So if you have a look at the real impact of the EU referendum, it hasn't been on fundamentals. It's actually been on currencies more than anything else. Sterling's depreciated, and that's caused a knee-jerk response among investors. They've moved out of UK domestic stocks into overseas earners. And that actually provides us with an opportunity because it means we can go ahead and buy companies which have got good medium-term prospects on knockdown valuations. And it's those sorts of opportunities that come along every 4 or 5 years that we actually relish.
Have you got any examples of new stock ideas that you've added to the portfolio?
Yeah, so in the summer we were able to add to a company called Virgin Money. Now, Virgin Money is still producing really strong growth in both mortgages and credit cards. And interestingly, this company isn't taking huge risks to do that. The underwriting criteria they use are really conservative. They've got an average loan to value of 55% across their mortgage book. So they're not taking huge risks, but they're taking market share away from some of the big banks like Lloyds. And so they're able to grow their earnings. That's coming through in the form of a rapidly growing dividend. And actually the benefit to our end clients is that we're able to identify companies where you're not just seeing a decent dividend yield, but also good dividend growth. And over time, we think that's got to be reflected in a rising share price.
Brilliant, Tom. Well, thank you very much for your time.